Hi, it's John Kelly. In this module, we are going to discuss Section 701, Key Audit Matters. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, the definition of a key audit matter starts in 701.8, and the definition is matters that were, in the auditor's professional judgment, of most significance and were communicated to those charged with governance. Now, as an aside, if you include a key audit matter or any other matter or modification in the draft audit report and give that draft audit report to those charged with governance, the audit committee, for instance, that serves as communication. Now, the definition kind of continues in 701.9. It's something that requires significant auditor attention, considering matters such as something that's of higher risk of material misstatement or something that is a significant risk, something that requires significant auditor judgment about areas of significant management judgment, and something that has to do with the effect of significant events or transactions. And it sort of finishes off in 701.11, basically those matters the auditor picked by applying professional judgment. And the other thing that 701.11 tells us is a key audit matter is not a substitute for a modification. If you need to qualify or deny or have an adverse opinion, then you don't use a key audit matter instead. Now, you will need a key audit matter as well if you have a modification, but you don't use it instead. How you describe the key audit matter in the report 13A, why the matter is considered significant and therefore key, and how you audited it. And A46 gives us some hints as to how we might describe how we audited it, response to the aspects that are relevant or to significance to assess risk of material misstatement, brief overview of the procedures you used, the outcome of the procedures, and key observations. Things that are by definition not key audit matters. Something needing a modification under 705, denial, adverse qualification, or a going concern issue that is to be reported in the audit report under 570. Those two things you will report as required by 705 or 570. And in addition, you have a key audit matter section and refer to the issue as described in 705 or 570. If you have no key audit matters, you say so in a key audit matter section. So regardless, you will have a key audit matter section, and that's supposed to be something that's rare. And you are to communicate to those charged with governance key audit matters or why there are no key audit matters. And certainly document. Document significant matters and why you concluded they weren't key audit matters. Document why you concluded that there were no key audit matters. And if there was a key audit matter, and in the very unusual and rare circumstance where you decided not to include it in the report, you would document why you decided to do that. Now, this will vary by country. Canada, for instance, will not require inclusion of key audit matters, so you need to check your jurisdiction to see how key audit matters are being implemented. The other thing about the key audit matter, and indeed the new audit report, there is a disclaimer effect. In other words, describing a key audit matter mitigates auditor legal exposure by serving as a disclaimer. And there's been research done on this. So, thanks for listening.